Hi, everybody. Welcome back to Ox Talks. Appreciate you being here, tuning into the show today, and thanks for supporting the channel. Have several stories and articles I want to share with you today. Two on the economy and two at the end, just briefly addressing some crypto news I saw that I thought was very interesting. Some comments made by Dimon today, the head of the country's largest bank, about Bitcoin, and some XRP news. Before I get to those articles, the last couple of weeks on this channel have been discussing the impact of, and we know what happened Friday, the impact of the ADP jobs report on not only the 10-year bond yield that's been skyrocketing, but also on the broader stock markets. And we know last Friday there's a pretty substantial sell-off. I see the Dow recovered some of that today, although not just about a third of it. The NASDAQ still finished down a bit. S&P was up a fraction, but they did not. The markets did not recapture what they gave back last week. So we have this jobs component to the Fed analysis and what they're going to be doing with their next Fed meeting and those for the rest of the year. Are they going to continue cutting rates? Are they going to pause? Or are they going to reverse course and start raising rates? And this impacts impacts all of us in some way or another. It impacts your 401ks if you're in the markets. It potentially impacts your employers if you're relying on a paycheck every week, if they start losing money in the stock market. Anyway, this stuff all flows down, okay? So let me share with you two stories. One, just a headline out of CNBC to set the tone here. It says, with inflation reports looming, Bank of America sees no Fed rate cuts this year. B of A, according to article off of CNBC an hour ago, B of A sees no Fed rate cuts this year. Remember, just about a month ago, the markets were pricing in 4 rate cuts. And then that model has shifted now to just a couple of rate cuts. Next story I'll share with you is out of Forbes Money. It says next CPI inflation report could reduce 2025 Fed rate cut expectations. Equity markets and bond prices fell harder after the release of the December jobs report as the dollar and bond yields surged. However, it says market moves on January 10th were about more than just the jobs report. Anticipation of this week's forthcoming Consumer Price Index inflation report may also have been a key factor that moved markets. It says base effects threaten to make year-on-year total and core consumer inflation rates accelerate in the December CPI report that will be released on January 15th. That's on Wednesday. Furthermore, if year-on-year total and core CPI inflation rates accelerate for December, financial markets could face significant turbulence as investors' expectations for 2025 interest rate cuts fall further. It says equity markets and bond prices fell hard after the December jobs report as the dollar and bond yields surged. However, the market moves on January, it says, were more about than just the jobs. The strong jobs report, again, I've said this before, it is government statistics. You got to take it with a grain of salt. I think we all expect to see a major downward revisions next month. But it's what's being published, and it's what the markets will look to try to glean some insight as to how this will impact the Fed's next move. It says, however, other data were also positive and stronger than expected, not just the jobs report. It says December ISM non-manufacturing index accelerated to 54.1 from 52.1, reflecting ongoing growth in the services sector. Plus, weekly initial jobs claims fell to a very low 201,000, while the latest JOLTS jobs report from the U.S. Bureau of Labor Statistics reflected an upside surprise, almost 8.1 million open jobs in November. Leave your comment below. Are you guys looking for a job? Do you know any family member or loved one looking for a job? And what is their success ratio right now? Are they finding jobs? Are they plentiful? Are we just being basically BS'd here? The only true weak economic data last week was a decline in November factory orders by 0.4%. says the week was otherwise filled with upside surprises for the economy. Beyond positive growth data, the Federal Reserve released the minutes from the December 2024 meeting of the Federal Open Market Committee, which revealed their concerns about elevated inflation. While the Fed minutes and solid growth data had already dampened expectations for future Fed rate cuts during the week, the December jobs report effectively drove the probability of a rate cut almost to zero, since the unemployment rate fell to 4.1%. And payrolls added 256,000 new jobs in December. We covered that last week, with only a very modest net downward revision to the previous two payroll figures. I bet you see, just a layperson perspective, I bet you see a massive revision next month. This week's December inflation report are likely to be more important for markets and Fed expectations than December growth reports. The December Consumer Price Index and Producer Price Index inflation reports are likely to show modest month-on-month pressures with a risk of accelerating year-on-year CPI and core CPI rates. November year-on-year consumer inflation rates are already elevated, with total CPI at 2.7% and core CPI at 3.3%. Total personal consumption expenditures inflation at 2.4% and core PCE at 2.8%. Despite already elevated inflation rates, this article says that it's cautioning that the December CPI report released on January 15th, 2 days from now, could show accelerations in year-on-year total CPI to 3% from 2.7% and core CPI from 3.4% to 3.4% from 3.3%. If year-on-year total consumer inflation accelerates in the December CPI inflation report, the dollar and bond yields could rise further in the week ahead, adding more downward pressure to equity prices, bond prices, and even industrial commodity prices. We saw a pretty good sell-off today in gold and silver. I mentioned on the show Saturday that it was interesting to see a substantial 10-year yield spike on Friday, with the metals also putting on a gain. That kind of reversed course a bit today, and metals seem to go back to what they usually do in the face of higher bond yields, and that's that they go down. Let's see how it settles out throughout the week, okay? A couple of quick stories on crypto that I thought were interesting to share with you, because we have this tug of war continuing between mainstream and certain figureheads continuing to talk down, okay, and show lack of support for Bitcoin and other cryptocurrencies, while you have other unbelievable news coming out. Both of these articles deal with the banking sector. So JP Morgan, okay, Jamie Dimon's out today from CoinDesk, says he sees no value in Bitcoin. The crypto's main uses are for sex trafficking, money laundering, and ransomware, okay? That's out of CoinDesk, comments made by Jamie Dimon, okay, head of JP Morgan, the largest, I believe it's the largest bank in the United States. And listen to this article out of Cryptonomist. This is today as well. Ripple and the registration with the American Bankers Association, a turning point for XRP. Okay, so on the heels of Dimon saying this about Bitcoin, you have XRP says recent membership of Ripple as a platinum member of the American Bankers Association, ABA, represents a crucial step in the company's strategy to integrate with the traditional banking system in the United States. This move not only highlights the importance of the solutions offered by Ripple, including XRP and XRP Ledger XRPL, but could also have significant implications for the future of cryptocurrencies in the American financial sector. The ABA, it says, is the main banking association in the United States, representing over 4,000 banks that together hold $18 trillion in deposits, extend nearly $11 trillion in loans, and employ more than 2 million people. Being a platinum member means for Ripple having direct access to this network of influential financial institutions, including the main decision makers in the banking sector. With the registration, Ripple's in a privileged position to promote its technology within the U.S. banking system, directly influencing future financial and digital operations. Crazy, right? Thanks to its status in the ABA, Ripple can collaborate with the institutions that represent the 95% of the $13.5 trillion of U.S. banking assets. And this connection, it says, could facilitate the widespread adoption of Ripple's technologies, helping to integrate XRP and XRPL into traditional banking processes. So I thought that was interesting. If you guys are into cryptocurrencies, if you're thinking about learning about it, just keep an open mind and just see where things are heading. Again, I'm not trying to push anything, not trying to sell anything, not trying to convince you of anything, just sharing what I thought was some interesting stories today. You have JP Morgan head coming out and saying, it's used for sex trafficking and money laundering. Then you also have Ripple, being accepted into membership by the ABA. So very interesting. All right. Things are moving fast, developing very, very quickly and rapidly. Thanks again for watching, and I'll talk to all of you very soon. Okay. Bye.